So today I want to be looking at gold and Bitcoin, and we're going to be looking at comparisons between these two charts. So Bitcoin and gold have some similarities. Um, they are, well, at least their Bitcoin is considered a store of value, although that's debatable. Uh, it is pretty much the closest thing, the closest asset that we can think of, or the closest well, it's commodity to Bitcoin is probably gold. Some might argue that it's currencies, but in terms of the idea of what it represents, a sort of safe haven and a way of circumventing government's manipulation uh, of the money supply, I would say that gold is the closest thing to Bitcoin, even though it is actually quite different from it. But the focus here is going to be on technical analysis and looking at how these huge rises, these huge uptrends, these exponential uptrends differed and how they were similar. Because it gets especially interesting in what will be the second part of this video, where we look at how gold has retraced from its all-time highs and how similar that is to Bitcoin, Bitcoin's current retracement, and how gold seems to be more developed in its retracement and is possibly rebounding, whereas Bitcoin has not yet. But first of all, let's look at the rise to see what the differences and similarities are. So we're looking at a 1 week chart on Bitfinex here. It goes back to April 2013. Okay, so the number of bars here, or number of weeks in this case, since that's the time frame we're on, is 250 for gold. If we go to the very end of the uptrend here, which was at 1,900, you can see it goes back pretty far, and this should be about 700 bars. So first of all, the Bitcoin rush, at least the current one, since it's this period had pretty intense up and down trends as well. But in terms of everything up until this point, you can see that gold is a more established market, and of course it's been active for many more years than Bitcoin has. So the maturity of the market is one thing to note. The next thing is the level of the rise. So, I mean, just visually speaking here, you see this is pretty much almost flat, and then boom, it just goes absolutely crazy. Gold, it was sort of a steady uptrend over here, kind of keeping steady. No, although of course there were some volatile moves, nothing to the same extent as Bitcoin. And this can be demonstrated in a few ways. One way is to sort of draw parallel channels here, or just in general draw some channels to see, to get an idea of the range the price was going in. So this is not meant to be it's not meant to touch exactly, it's just to show the range of the price, the market structure, okay? So we have one clear channel over here. Actually, if we just bring that out, you'll see it pretty much broke over here. And this part in the middle is, well, it's certainly not a parallel channel, but I'm just going to draw this line here anyway to show you that this is sort of a ranging market. I mean, we did have higher lows over here, but we had lower highs over there. And then, we broke the lower low over here. So just in general, nothing particularly, just in general, it's not as clear of a sort of upwards channel as these two are. And then, of course, the last one was, again, a very intense exponential rise. Now, Bitcoin, what's interesting about Bitcoin is that it's virtually impossible to try to draw any sort of parallel channel here. I mean, okay, if you do from here to here, but even here, you're gonna end up over here, and then it's gonna break soon. So, and that's pretty clear. You can see, just visually speaking, it's pretty hard to create a parallel channel here. I mean, you could try over here. And again, this is not sort of to say something very specific, is to talk about the general market structure. And what does this mean? The fact that we can't create Okay, so we have one parallel channel over here, but then there'll be another one over here which breaks again when it rises higher, and then there'll be another one which breaks again. So this basically, if you have an exponential rise, it's clearly hard to create parallel channels because it's just rising so fast. It's constantly breaking that upper boundary. Whereas gold, it had a bit more of a controlled rise. Nonetheless, there are some. Those are some of the differences. Well, before we go on to the similarities, there is another very big difference, and this is really shocking when you let it sink in. But if we go to sort of this low over here, where we already started like moving up from the $250 level in April 2001, we look at the rise first of all. So that's 650% over about 550 bars. Okay, 650% rise over 550 bars. And now we go to Bitcoin, and I've done this. I'm not going to go into this analysis over here, but if you zoom in and you get the right scale, you'll find that about 17th of August 2015, we have a price of about 170, actually it's 160 something, and that's sort of like one of the pivot lows. And if you go there from here to here, what do we see? We see, first of all, it's 120 bars, and it's actually, I'm sorry, let's just get this last monster green candle, 2000 August 2017. So again, we go to this 165. What are we seeing here? We are seeing 121 bars, almost 12,000%. Okay, so actually it's a bit less, about 11,700. In any case, what this means is that we got basically approximately 17 times the level of growth. All right, so from about 650-ish to about 12,000-ish. 17 times the amount of growth in how many bars? In about 120-ish bars. It's annoying this doesn't actually stay there, but in any case, I'll just bring it up again, just because it really is absolutely absurd when you think about how high Bitcoin has risen. And I think this is very relevant in trying to determine how, let's keep going crazy. It's very relevant to determine how far it's going to come down as well. Okay, so 25th of August, we're looking at 165. Okay, it's a bit annoying it doesn't go to the end there. Here we go. So yeah, the 120 bars. So as I said, it's 17 times the amount of growth, but not only that, it's in 5 times less time. So the level of this exponential growth compared to gold is just, it's on a whole other level, okay? And again, this will play into how far it potentially retraces now. So what else can we see when we compare these two charts? So the exponential structure. So let's have a look at, especially the very end. I find interesting because it's similar to Bitcoin. So here, we have, as we mentioned, we have these sort of somewhat parallel channels, and then we have some sort of larger corrections here. We have a larger correction here, correction here, there, and then we pretty much just go nuts. And Bitcoin, we have somewhat similar, structure. I mean, as most market structures, of course, correction, 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 and then we pretty much go nuts. But look at this. This is something I find interesting. So most of the times, the corrections precede a bearish engulfing candle or something similar to that, where there's, a pretty strong push to the downside. And here, just before the final spike, we had a bearish engulfing candle, and there was no follow through, unlike pretty much every other time that there was a bearish engulfing candle. And in gold, we can see a similar, actually the pattern is even stronger here. Pretty much every time there was a bearish engulfing candle, we had follow through, bearish engulfing, follow through, bearish engulfing, follow through. Not quite bearish engulfing, but pretty bearish candle, follow through, and well, this was indecision and then bearish, and a pretty strong bearish candle and some follow through. But look at what happens here just before the end. We have a very clear bearish engulfing candle and no follow through, and then we have this last final push. So that I find quite interesting. I think that if you're looking at an exponential rise, it's quite normal for the markets to be highly irrational at the end, and of course highly volatile as well, where your standard patterns may prove to be very ineffective. So and it's a sign, of course, that the market is just going nuts, and that it's close to falling, because the market can only be irrational for so long. And this sign, I think, is very interesting, because you see the final push in both of these charts is the most intense, the most exponential. You see here, it's just pretty much a straight line going up after this bearish engulfing candle. Bitcoin, bearish engulfing candles, just a straight line going up with no corrections. So I thought that was quite interesting. And then let's have a look at the candle sizes. So if in general, you would expect candle sizes to start decreasing in length as we get to the top. Now let's look at Bitcoin. We have a 15% jump, 20%, so there's an increase there. 33%, again, another increase. And 26%, so a small decrease. So what this tells us is that, at least in terms of the green, of course, if you move on here, you're going to see some, small, well, first of all, a big bearish candle over here, and then some smaller candles, although the size of the candle after the breakdown isn't as relevant in terms of trying to determine when it's going to finish. But the point here is that Bitcoin, we had increasing size candles. It was only the very last one where we had a small decrease, but that isn't particularly relevant. It certainly isn't a good enough sign to say that, hey, we're at the top. And of course, trying to guess the top of something which is moving this high, this fast, is very hard. Well, it's impossible to guess the exact top, but certainly the signs of the bearish engulfing candle I thought was quite relevant. And of course, there are many other indicators which can help in determining that. But for now, we're looking really at just a price action. And with gold, we saw here we saw again a similar thing. So you can see, just I don't even need to do it. Visually speaking, look, small candle, larger, even larger, even larger, even larger. And then here we started finally seeing some slowing down. So what does this mean? It means it's, in terms of this particular indicator, let's say, although it isn't really an indicator, it's this analysis of price action, exponential moves are very, very explosive, and they end, or at least they correct very intensely to the, which means that you won't see it coming. It won't be like a slow rise to the top where it gets slower and then it comes down. It just explodes up and then it just explodes down, as you can see here, and of course with Bitcoin. All right, so that's the nature of this price action going up. And now let's have a look at some exponential moving averages for Bitcoin and for gold. So again, here you can see, based on, well, let's first do a quick analysis of this. So what do we see with gold? Very roughly speaking, we saw, first of all, before this monumental rise, or let's say at the beginning of it, we saw quite a few touches on the yellow line here, which is a 55 EMA. Okay, so we have here 1, 2, 3, almost 4, 5, and then a breakdown, 6. And then after that, when it started getting towards the end, we started hugging the 21 EMA, which is this orange line. Okay, so well, this is a breakthrough, but 1, sort of 2, fake out here, 3, 4, 5, 6, 7. Okay, so we went from the 50 to the 21 with a small touchdown on the 200. Now Bitcoin is just nuts. We don't even get anywhere close to the 200, let alone the 55. We have just two touches on the 21 EMA, and then we barely touch the 8 EMA going all the way up here. And this again just goes to show how wild this move was going up. And as you know, whatever goes up has to come down. And if it goes up at this speed, it just has to come down very hard as well, which will lead to the second part of this video. So again, in conclusion, this video was meant as a general price action market structure analysis, more or less market structure, and to show the similarities and differences between gold. And I think that they're quite interesting and quite relevant for trying to determine, well, first of all, also when gold will properly recover, because we are in a potential accumulation phase over here. But you will see that there's actually a lot more similarities than there are differences in the correction up to about this point, and what that might mean for Bitcoin. All right, that's it for today, and hope you join me for part 2, where I look at the correction and what this means potentially for Bitcoin's future.